Hey guys, I wanted to show a new company for you guys to keep on your watch list. The company is called KE Holdings, ticker symbol BEKE. And this has been a favorite of ARK and their ETS recently. They bought another 34,000 shares today. They've been buying them for the last week or two, pretty steady as the charts have gone up or down. And I think this is just a really good stock for you guys to keep on your watch list. It's the largest Chinese IPO since 2018. Like I said, ARK's been buying them up. They're in the real estate space similar to a Redfin or Zillow in the Chinese market. Wall Street analysts right now give it 6 for a buy, 6 for a hold, 1 for a sell, and 3 for a strong buy. So I really think that this company is going to take off in the next 2 years or so, especially as corona cases seem to worsen. People are more likely to stay at home and look for their homes and rental units instead of going out to these places. Let's take a look at what the Bulls and the Bears think. Or actually, this is my opinion. And I just want to make it clear, don't buy this stock just because someone in a video tells you to buy it. You got to make your own decisions, do your own due diligence in the company. I don't have shares in this company as of now, but I do plan on buying them in the future. So let's look at the bulls. Let's look at the good things about this company. So China is a huge country, a lot more users, a lot more potential for more users, more transactions, and I think with Corona and this new strain that online is going to be even more important in the future. People aren't going to want to go out in public and they're not going to want to go out and see these houses, go into other people's houses and worry about getting the disease. So I think that that's a major upside. Those are the reasons why I would consider buying BEKE stock. On the other hand, the Bears, real estate, although you can buy things over the internet, it's always better for investors to go and see the property themselves. Inspectors are going to have to go out there. So you're never going to get away with 100% online. You're always going to have to go and see the property at some point. So that's one major downside. The other downside is competitors like Zillow and Redfin do have the opportunity to move into China. They're big names over here in America, and they already know the game. They're already involved in the game. They already have people, staff, processes, so there's no saying that they can't come to China. They might see that as a good market for them to move into. Then the other major concern that I would have with this stock is that it is a Chinese stock. So again, it goes back to a Luckin Coffee. Even Alibaba has recently been questioned on some of their business practices. So the regulations over in China are very different from the United States. So you don't get the same type of information and reporting from Chinese companies. So that's another thing that you might want to be aware of before buying this stock. Let's look at some technical analysis now on BEKE stock. So the stock was down 6.5% today, and it looks like it's continuing to drop. So I marked out a couple different price levels that are interesting, and these are support and resistance levels. So it looks like they just right now they're at this blue line, this one support, $57 or so, and previously it hit that same line over here right after earnings, and I think that we might see a bounce here and then it would come back up. It seems to be trading sideways at this time. The Bollinger Bands are narrowing and it seems to be following right around the middle of the Bollinger Bands. So we can kind of see where it's going. However, after that big drop, that 6% drop, it now looks like there's a chance that it could drop further. So if that were the case, I would say that probably the next interesting level would be down here at this red line that I put. It would be $53, give or take. I think that that could be the next level that we could see being very interesting. So overall, on the year, this is the daily candlestick yearly chart. As you can see, it came up and then it's kind of just going sideways now. So with that being said, let's take a look at the RSI. Right now it's a 36 on the RSI, and it seems to be going down. So if you're looking for a good entry point, I think that we're starting to look really good. Personally, I would wait a little bit because it seems like it's trending downward, and especially after that 6% drop today, it may be worth it to apply a couple days and see where the stock goes. Looking down here at the MACD, right now it's looking negative. You got this last bar is kind of big, so to me it looks like the stock is trending downward. So depending on your style of trade, you might want to wait a little bit and see if you could find the bottom before it comes back up. Or most likely what I will do is I will buy a little bit, a smaller position, and then as it falls further, I will continue to average down. That might be the best solution in my mind. But again, you guys need to decide what your risk tolerance is and how much you would want to go in with a full position, or if you want to build out a position over time. I think in the long haul, over the long term, this stock will be going up significantly, but you never know. So maybe you want to come in with a smaller position. Okay, let's next test BEKE, Redfin, and Zillow and see how they stack up against each other. So this is a chart. See, the first column is BEKE, KE Holdings, then we got Redfin, then you got Zillow. So in terms of the stock price, BEKE and Redfin are pretty similar. Zillow is a lot more expensive, almost double. Moving average, it all stays pretty consistent. Now this is the interesting part here. So market capitalization, look at this. 51 billion. That's BEKE. 7 billion is Redfin, 30 billion is Zillow. So you can see the market cap is the biggest for BEKE, and it's not even close, especially compared to Redfin. Zillow is even almost half of BEKE. So it's actually a really large company, and they got more shares outstanding. The annual sales, look at this, 6.5 billion as compared to 2.7 billion for Zillow and not even 1 billion for Redfin. Annual net income is lower, but that even is pretty much on pace with Zillow. Last quarter sales, it's BEKE being over in China. There's a lot more people, a lot more transactions. It's just a larger quantity, and that so you have more transactions, more money, more income, and the share price is still the same, even though the market cap is almost double. I think that's reason enough that you would want to start to build a position in this company, because pretty soon it's going to catch up with it. That's only my opinion, though. You never really know. Okay, guys, here's the website, and this is what it actually looks like. Now, keep in mind it is a Chinese website, so maybe it makes more sense to them than it does to us over here in the States, but you could see that there is a lot here. Sorry, let me scroll up to the top. Alright, so this is what it looks like. So it does look a little bit like Zillow or Redfin. You got secondhand housing, new houses, renting, overseas, decoration, commercial, community. I am the owner, so that's like the Zillow feature where you could put information about your house. There's an app, so you can see it does look pretty nice. It looks like let's click into one of them and we'll take a look. while we're doing this, if you guys could like and subscribe and comment below, that would really help out the channel. Really trying to get to 100 subscribers, so let's make that our goal. 100 subscribers, please. Alright, so as we can see, this is a page of one of the properties, and well, I don't read Chinese, so that's a little bit hard, but you can see looks pretty intuitive. Looks very similar to a Redfin or Zillow. Alright, so my thoughts on the company as a whole. I think that China is a great real estate market. I think it's only going to expand and become more valuable. I don't really see Redfin or Zillow coming into China. I could see them maybe branching out more into European states, but I don't think that they're going to enter the Chinese market. I could be wrong. So I really think that KE Holdings has a chance and an opportunity to really corner the market and to build a bigger business. So here's my plan. I plan on waiting for it to drop a little bit. I'm going to buy as it falls, not as aggressively, and hold for 2 years. ARK is giving it price targets of up to $93 a share. So right there you're looking at, $30 to $40 per share increase. So I plan on holding it for the next 2 years and buying in to keep my cost average around 50. But we'll see. Alright, catch you guys in the next one.